Hello and welcome. You're watching All About Your Company here on ET Now. I'm Harsh Saita. Today we're going to be talking about Sarda Energy and why is this one interesting. Let me first start off by telling you why and what really stands out. One, the company has made a big pivot from metals and commodities. It's moved, or rather steel making, it's moved towards energy. And that's a huge pivot that the company is making. In terms of the capacity, etc., we'll try and discuss that at some point in the show. Second, you're starting to see a surge in power demand. So I'd be curious to know as to what's playing out on ground. And Sarda Energy is well placed to kind of help us contextualize and understand what's playing out. The third piece is I really am keen to know as to how the business is going to evolve over the next 2 to 3 years. They've got very strong targets, doubling of power capacity, at least in one of their plants, and 4x of their mining capacity is what they're going to do by 2030. So very strong growth plans is what they have. Risks in the power, the business pivot, of course, is something that I'd want to understand better, and what that means for a company like Sarda. By the way, last 12 months, it's given a 23% return to shareholders. And what to make of the traditional metals business. What is it that we can expect going forward with regard to that? We try and understand that and more. Let's first take a bit of a step back, try and understand the business itself. With regard to the context, it was incorporated in 1973, market cap of around 20,000 crore. Currently, it's into energy, minerals, metals, and has captive resources, at least on the mining side of things. And that places it very uniquely in the sense that it's got very good backward integration, and now with power as a component as well. And given that there is a high reliance on power in the traditional sector that it operates in, that energy element also adds to the EBITDA as well as the margins of the company. It's part of Sarda Group, promoted by Kamal Kishore Sarda. In terms of products, and we've revisited this on a lot of occasions if you follow this show, with plenty of other companies. Iron ore pellets, that's the absolute raw material with regard to steel making. Then there's sponge iron, which is the second in turn in terms of the process of making steel. Then there's steel billets. Then there are wire rods, which are nothing but flexible wires. Sarda Energy does sell wire rods as a final component of what they sell. High carbon wire is obviously wire rods with very high intensity carbon already inside, which is strengthened steel wire. For construction industry is predominantly where it's used. Ferromanganese, it's an alloy adding strength and deoxidizing the molten steel that is there. And a lot of the ferroalloys that Sarda Energy manufactures is also used for the purpose of export. Now the difference between export as well as domestic is, of course, export. You're on a better margin trajectory in terms of the output that you sell to exports, but there's a cash flow drag of around 20 odd days versus sales in the domestic market, where the cash flow is realized 20 days earlier, and therefore that is the difference that you'd want to understand across different products. Then there's silicomanganese. There's silicomanganese is nothing but an alloy adding manganese and silicon to steel. So that's the silicon manganese alloy, which also Sarda Energy sells. Then there's thermal power that it generates from coal-powered steam turbines. There's hydropower, electricity from water flowing, of course. Solar power as well is what it generates. Then there's coal mining, which it does, which is extraction of coal. I spoke about this. Captive use and sale of coal is also what they undertake, but largely captive. And then there's mineral fiber, which is insulation material, improving building energy efficiency. So all of this is really the internal as well as the externals of it. A lot of the products are used internally to kind of forward integrate and sell a product which is slightly higher value. But all of that is also some of the steel billets and the like are also sold by themselves on a standalone basis. In terms of the revenue mix, you can see power is around 45% of the revenue. FY26, this is taken straight from the P&L console numbers, and steel plus ferro is around 55% of the revenue. But you look at profit component, 65% of the profit is generated from the power space, whereas steel and ferro is around 35%. This is consol level and ignores inter-segment. These are two things you want to keep in mind. This is consol plus ignores inter-segment. So on a standalone basis, this is how the numbers really stack up on each, but at a consol level. So that's how this plays out. In terms of some interesting nuggets which I've pulled out, the current pellet capacity is at around 9 lakh metric tons. 35% of that is for captive, and the average realization is approximately 9,700 rupees. For sponge iron, it's around 3.5 lakh metric tons is the capacity that they have. Captive is around 85%, so a larger chunk in captive. Only 15% sold out in the open market, and the average realization is 26,000 rupees per metric ton. Semi-finished products, which is billets, they have around 3 lakh metric tons of capacity. 85% is captive, and 41,000 rupees approximately is the average realization. So some of these metrics important. Of course, it's all available on their investor deck in the snapshot for the Q4 results that they've given. Of course, their con call was also interesting in terms of the listen, and we had one of our analysts listen to it. Janam heard that con call, and we'll quiz management with regard to some of those pieces as well. Now, let me talk about the P&L and taking a step back, trying to understand as to what the company has done over the last 3 to 4 years very quickly. 11% 3-year CAGR in terms of the top line is what they've done, but this will go up dramatically as power starts to scale upwards. We'll try and get a sense as to what this number could well be going forward. Some of the power is used internally as well. So around this 5,700 crore number, out of which 700 crore of power is actually used internally. So the actual total consol top line should be around 6,400 crore, 700 crore is inter-segment, and therefore gets knocked off in the consol numbers, which are in front of you right now. EBITDA growth, 19% is what it's demonstrated over the last 3 years. So that's how it's played out. Around 1,800 crore of EBITDA is what it's done in FY26. Profitability has grown at 22%. 1,110 crore odd of profitability is what it's done. So thumbs up with regard to growth. Also, there's a business pivot at play, so that's something you want to keep your eye out on. Margin trajectory, around 31% is what the margin is currently. It's inching upwards as a larger component of the top line becomes power and power driven, and this may continue to inch upwards even going forward. It also leaves the business slightly less vulnerable to cyclicality, which is a positive, right? You want to be less cyclical, and therefore when you're moving away from metals, commodities towards power, it's slightly less cyclical in nature, and that's one of the key objectives. Of course, we'll quiz management on what the key objectives are with regard to getting into power in such a large fashion. We spoke about that. In terms of book value, currently it's at around 7,400 odd crore. So you're seeing that there's in terms of market cap to book, it's around 3 times. Book value is what this one trades at. So that's something you want to keep on your mind. In terms of the borrowing number, it's at 2,600 crore currently. And why this may not be as much of a concern? One, these are balance sheet heavy businesses, both power as well as commodities, but the company is net debt free. And therefore, there's technically enough assets available to kind of knock off those liabilities. There's also short-term borrowing which is there on the balance sheet. So that too has ballooned a little bit over the last 6 to 12 months. But nonetheless, there is enough of cash available on the balance sheet to kind of take care of that. Now, let me talk about cash flow to EBITDA, and there's been a bit of mix-up here in terms of if this is shareholding pattern. Around 73% is shareholding of promoters, but this is cash flow actually. This graphic is incorrect. The cash flow is currently at around 1,735 crore, which is cash flow from operations versus the EBITDA number of around 1,800 crore. So the conversion is fairly healthy in that sense. We've got around a 97% conversion this year. Was around 80% last year, was around 90% year prior. So the cash flow conversion is clean. There's no concerns with regard to cash flow conversion from EBITDA. So no concern on that count. Of course, they're reinvesting heavily, and therefore the cash flow conversion to net cash flow is not happening because they are reinvesting straight back into the business, which is also a positive. I mean, as shareholders, you would want that. You would want that cash flow is deployed efficiently into businesses, into high interest and return yielding investments. And let's look at the return ratios, therefore. You've seen very strong return ratios on the base, which is FY22, where you had that metals rally. But outside of that as well, it's bottomed out at 15%, jumped just a wee bit above that at 17% currently. These are ROCE ratios and therefore accounts for the debt as well, which sits in the balance sheet. 17%, not a bad ROCE ratio to have. In terms of shareholding now, 73% owned by the promoters at this point. We've got 3.5% owned by FIIs, around 3% owned by DIs as well, 20% owned by the public. So that's really the texture with regard to shareholding. In terms of valuations, and this is where it gets interesting, there's only one analyst that tracks it. So therefore, the 1 year forward at 9.5 times earnings may be a little distorted, but the 2 year average is around 9 times, and the 5 year range is between 5 and 13 times. But when I look at even the 5 year price to earnings ratio, average versus the current, it trades at around a 20 to 30% premium to the 5 year average, which is the trailing 12 months price to earnings, which is sub 20 times approximately, is still a 20 to 30% premium to the 5 year average. But you're going to likely see very strong growth over the next couple of years, given the kind of scale up in terms of businesses that you have. Let me in fact go across. We have the management of Sarda Energy. We have Nilay Joshi, who's the executive director, joining us. Nilay, great having you. Let me first start off with regard to just power demand, which is playing out in the economy. You obviously sell to private parties, industry as well. What's the demand looking like? Is the demand extremely robust? Is there pricing power that you currently have, which you probably didn't have a few months ago? What's playing out? Give us a sense.
So the power demand normally is follow the seasonal pattern. In Q1, the normally very strong. So the power demand remains strong. Peak power, we must have seen, has touched historical levels. So from that perspective, nothing to complain.
Okay. So that's with regard to power demand. Talk to us a little bit about pricing, what's playing out in the marketplace right now. I know that you're one of those which tracks this or rather is linked to the strength of power demand and pricing. Your results are linked to that. Give us a sense of what's playing out.
So just I'll give a perspective. So till last year, we had out of the power plant, the thermal power asset, IPP is as of now 600 megawatt. And till last year, we had 100 megawatt under PPA. Now we have 300 megawatt under PPA, which is 50% capacity. Out of that, 200 megawatt power we are supplying in the current, we have started supplying already, and balance 100 we will start from 1st April 27. What this does to our numbers is that it reduces the volatility, so it becomes the numbers become more and more stable as you enter into more PPAs. Having said that, Q1 realizations are normally very strong. So because balance 300 megawatt or as of now 400, we are selling under short term and exchange. So the exchange realizations in Q1 are normally very strong. So last from March end, the realizations have moved up and they're quite strong. Yeah.
Okay, that gives us some texture, Nilay. And give us a sense that you obviously give us some bit of flavor, kind of reduce volatility on the numbers. That's why you all are going bigger on power. But it's a very large investment, right, Nilay, even for the kind of size that you are at. 3,000 odd crore is large in terms of the balance sheet size for you. Give us the rationale for this. Is it just about reducing number volatility? Why power exactly as a space?
So a couple of things. One, I mean, the way the country is investing into various industrial initiatives, whether it is fab manufacturing or data centers, or the whole Atmanirbhar Bharat push, we expect that the next decade, the energy demand for India is going to remain very strong. And hence, so that is one part, the demand part. On the supply side, I mean, because we have experience, long established experience of running power assets, so we can see that we can contribute positively in the country's growth in that fashion. And hence this focus on power, that is one thing. Second, also On the hydropower side, we remain one of the very few companies with the capability to actually, or groups with the capability to actually build hydropower assets. We have 170 megawatt operating and another 140 megawatt under construction. So that is our forte. So that is why we are positive on both thermal and hydropower. Additionally, in terms of resources, because we have our own thermal coal mine, the resource availability for power generation is also there within the group. So it's in that way becomes integrated. So overall makes a lot of business sense from a macroeconomic as well as a company perspective.
And your current capacity is what? 600 megawatts is only
No,
from Binchcoat, right? You were trying to break that up.
600 is Binchcoat. We have 160 between Raipur and Vizag, and then which are captive power plants, and then we have 170 megawatt of hydropower. We will have 50 megawatt of solar power starting in the current financial year.
Perfect.
So
So for the moment,
as of now we are
yeah,
930 megawatt in total, and by September we hope to add another 50 megawatt of solar, so we'll be around 980, like 1 gigawatt almost. And
okay,
that's
got it.
what
And out of that, perfect. How much is IPP and how much is CPP out of that? If you can give us that split.
so hydro is all IPP, 170 megawatt. Binchcoat 600 is IPP, and 160 is basically captive, but we do sell on and off a little bit, but mostly captive.
Understood. And with regard to just the kind of split or the numbers that you were speaking about, so out of the 300 megawatt, which is, or rather the 600 megawatt which is active, I believe you said 300 is active, 100 is still to go on stream this year, and then another 100 next year. Could you give us that
Sorry,
data?
I'll just explain.
Yeah, please, if you
We
can
have
clarify that.
entered
Yes.
into medium and long-term PPAs totaling 300 megawatt as on date. Okay.
Got it.
The broader strategy is basically to remove volatility from the numbers to the extent possible, and we would like to lock in 70 to 80% capacity in long-term PPAs. We are working towards that. So as a part of that initiative, we have increased the PPA from 100 megawatt, which was last year, to now 300 megawatt. Out of that 300 megawatt, we are supplying power under 200 megawatt as on date. And because the balance 100 megawatt will start from 1st April 2027 as per the PPA terms, but the PPA has been signed for 300 megawatt. So 50% of the 600 megawatt is logged under PPA, medium and long-term PPAs. I hope
Fully understood. Okay. Understood. Sorry. Yes, I needed that clarification. Okay, now talk to us about Binchcoat in particular. With regard to the expansion there from 600 to 1200, you're currently 2 into 300 megawatt there. You're going to go to 4 into 300 megawatt there. How quickly does that happen in terms of timeline? What are the phases that we look for?
So see, just 2-3 things. One, the expansion is a brownfield expansion. So we have certain infrastructure which is already in place, which is water, land, railway line, railway siding, coal handling, power evacuation, all of that is already in place. We need to put the BTG, and we have applied for EC because the earlier EC for 2 into 300 had lapsed. So we had applied for that, and we are working on the DPR as we speak. So that is where the project is. Once the EC is received this year, then we will basically full hog will go for the project.
So what should the typical timeline be?
Yeah, so compared to a greenfield expansion, we expect this to be much faster. Aspiration is to complete it by 2030.
2030. Oh, okay.
Yes.
Understood. And with regard to the PLF at Binchcoat, the 600 megawatt, out of that, how much is, what's the PLF like in terms of the number? How much is, what's the revenue number and what's the EBITDA number, FY26, and what's the expectation, FY27?
No, so as we have disclosed, around 2/3 of our EBITDA came from energy in total. and the PLF for the year was around 79%. So the PLF was 79%, and the realization was was a little higher than 5 rupees per unit for FY26.
Okay, Nilay, unfortunately, I'm completely timed out on this edition of All About Your Company. I'd love to chat with you in greater detail with regard to this, and apologies for this, but what we're going to do is slip into a very short break, come back, we'll have that mega conversation with regard to Sun Pharma on the other side. Stay with us.
From a diabetic standpoint as well as from an obesity standpoint.
And do you see ballpark market size for this drug, given India is the diabetic capital?
No, there are various estimates that are coming at this point in time. So I think we'll have to wait and see where the market actually settles.
Hey, Navya?
Hi.
Hi, Kabir. Cricket lover पढ़ती है I knew we were a match.
Are we?
You think this could work?
I don't hate the opponent.
Okay, you could play the opponent. KKR versus Mumbai Indians. Give us a fun challenge to settle the debate.
Okay, let's see.
You go first.
No way, this is too easy. Google, make it tough.
New AI mode in Google search.
Every victory begins with small steps, and the smallest preparation can change the entire outcome. Be it on the field or in life, only being prepared gives protection. And protection builds confidence. Just like LIC's Bima Lakshmi, a special plan exclusively for women, where small savings provide great protection, so that in every field of life, you are ready for every moment. LIC Bima Lakshmi, ready for every moment.
Meet the tomorrow today. ICFI is the bridge between tomorrow and today. Bridge between aspirations and accomplishment. Bridge between I wish to I can. I will remove the gap. Welcome to the I. I am ICFI. Belief called I. I can fly above imagination.
AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने।
मनी 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 एवरी मंथ।
सोच बदलो और बैंक भी।
भीड़ में भी कनेक्शन इतना फास्ट लगेगा नेटवर्क पे सिर्फ आप हो। इंडिया का पहला एयरटेल प्रायोरिटी पोस्टपेड विद फास्ट लेन टेक्नोलॉजी, सुपर फास्ट स्पीड्स, कंजेशन में भी।
Hello and a warm welcome. You joined us here on Markets at Lunch right here on ET Now. I'm Ashesha Dwaryu, and clearly it is turning out to be a good Monday for Indian equity markets. We had some news which suggested that the war in West Asia could come to an end, and that is the reason Nifty is now sitting with gains